Shares of media conglomerate Cablevision are actually soaring today on news the company will spin off Madison Square Garden, which owns coveted sports and entertainment assets such as the Rockettes and Radio City Music Hall, a live concert business, and the New York Knicks and New York Rangers sports franchises. Well, our Greg Miles is covering that story, and here's here to talk about it. Greg?
You know, the big question is whether this split will add value long term and even lead to a sale of part or all of Cablevision's assets. Now, with me here to talk about that today is Tom Eagan, senior analyst at Stewart. Tom, welcome.
Thanks.
Okay, let's talk about the cable business, the biggest business at Cablevision. Is this split going to add value for investors?
We think it's going to add value for two reasons. Not only does it highlight the separate assets at Madison Square Garden that haven't gotten a lot of credit over the past year, but it also increases the free cash flow of CVC itself because you're deconsolidating all the CapEx going to the Garden.
Okay, yeah, a lot of cash flow also, though, in the cable business, and the cable business going dramatically faster than its rivals in terms of cash flow, operating profit, also in revenues. That makes them very attractive to somebody who wants to come in and buy that smaller player in the industry.
Well, yeah, we think that Cablevision should trade at a premium to the other cable operators, not only because they're a catalyst like the one announced today, but also because, as you're saying, Greg, the cable operations are doing better, both on revenue and on cash flow growth.
I think there's a big company out there called Time Warner Cable. They got $7 billion in cash. It fits like a glove with Cablevision in the New York area. What are the chances do you think that we'll see an approach from a player like that now that it's a little bit cleaner at Cablevision?
I don't think we'll see anything in the near term, but what I do think happens is that this simplifies the structure. It simplifies Cablevision. Remember, they've tried to restructure the company before, and it hasn't happened either because it was either too inexpensive or because it was too complicated. This at least makes it more simple.
Let's talk about Madison Square Garden. A lot of assets in there. There's going to be much higher than expected capital spending, a $500 million plan that could be higher, they said today. Why do I want to own this share if it's split off?
Well, I think what makes MSG interesting is we've seen some really positive and favorable comps recently. For example, the sale of the Canadiens, the hockey team, and the sale of the soon sale of the Cubs. That sets high comps for MSG that aren't in the stock yet.
Yeah, you said that would really value the New York Rangers
right.
Hockey team and the New York Knicks basketball team at around $1.4, $1.6 billion. Doesn't that attract a buyer, somebody want to come in?
Well, I think what it means is that the stock will be valued, and CVC now will be valued by more than people had estimated before. So people, I think, had estimated MSG to be worth about $1 billion. Well, with those comps and with better, better detail on the other assets, you could get to values of about $1.7 to $1.8 billion.
And potentially even higher if sports franchises increase in value in the next, start having a winning season or something like that?
Well, also about we want to see more detail and financial improvement at the other divisions like MSG Entertainment.
Okay, now to clarify, the company saying today very clearly in the conference call, we have no interest in selling all or part or any part of Madison Square Garden. Do you see a scenario under which that could change?
I can see a scenario whereby they may sell other assets. Like, for example, we've long thought that the programming assets, meaning AMC, IFC, and We, the major national cable networks, could be for sale. Certainly there are buyers. We've seen a lot of cable networks purchased recently, such as NBC buying the Weather Channel.
Okay, we've got about 30 seconds left. Cablevision right now, soaring this year, even excluding the bump today. Time Warner Cable, Comcast, the rival, down dramatically. How much higher can this stock go?
It could easily go another couple dollars. Realize that they had a bad year last year. They were down, 22% last year. So this year's movement was partially a reaction to that, but also because the stock had been oversold.
Tom, we got to go. I want to thank you very much for your time. There you have it, Gigi. Tom Eagan talking about the split up.
All right.
Cablevision.
Thanks, Greg.